The broadcast is now starting. All attendees are in listen-only mode.
Hello, Warriors. Let's have a great week. How's everyone doing? Hello, Zig, Umar, Teresa. How are you? Hope everyone had a great weekend and all the women that have children had a nice Mother's Day. Constantine, Leon, Mark Hinman. How are you? Everyone doing okay? Yeah, it's the Pinkster. Hello, Hamid. Okay, so we all know after the close Friday, that negotiations broke down between Washington and Beijing, and we now have S&P's down 42 handles. So uh, Blake talked about, having a major binary event. What's interesting to me is not just that it's kind of expected that the S&Ps would do this, but what's surprising to me, and I went with it last night because it was showing some relative strength, was what crude did, since they're pretty tightly correlated. Thought it might be a breakout here, but maybe not. Maybe I need to adjust my line here now and just make it an ascending triangle instead of a symmetrical, and just draw it off this line at the last major high, meaning that we need 62.80 for it to break out. But anyway, excellent performance by crude in light of pressure of risk off here. Uh, so it makes me think that if crude could perform in a risk-off environment, what would happen during a rebound in equities? And I'm not saying it's going to happen. That's the kind of question I ask myself. If something isn't doing what it should be or normally does with outside markets that affect it, what's going to happen if that type of negative energy dissipates? So that's what I'm asking myself in crude. Something else that surprised me, and I'm not saying it's not going to happen, but with S&Ps down this much, a bit surprised we haven't taken out the double bottom in U.S. dollar yen. I would have thought we would have been under here with this type of action in S&P. So I guess the point being, normally, the expectation would have been, new lows in U.S. dollar yen with what's happening in equities, and it isn't. So potentially there's still a rally left in US dollar yen for better shorts. And of course, we are getting rates moving lower on this happening. Not, pretty good. I mean, down almost 5 basis points on the 10-year, but we are diverging a little bit under here on the 1 hour. And the 4, it's trying to dig its heels in here. Uh, but in May, it's still a higher low. Okay, we still have a higher low, so yields are higher, even though the S&Ps uh, are lower than they were at the end of March. So it still is possible we get some type of ABC. I really can't turn bullish either the yen or yields until we get this low being taken out here, and I think just could draw a line here on yields and see where a third drive might come in. Although, guys, you've noticed with me talking about these wedge lines on 3 drives, and the team talks about them too. They're called throwovers, that if you're trading the line, it makes you want to throw up. But this line's going to come in right around 2.25, and we'll see what kind of RSI reading we have should that occur. Looking at FX, cable doesn't look bad. Okay, he had a nice little pop here, still holding the moving average here. I can't really get bearish in Euro yet. We start closing back over this moving average. The only negative thing I could see in Euro right here is that we may end up with some type of 3-drive pattern up here at this major resistance at a previous high, which is this high. So right now it looks like a 1, 2, maybe we get a 3 up here after some kind of stop hunt. And then something else that's getting close to a probe would be this Aussie. You already have 2, and we're going for a 3, and it looks like it's going to come in around 69.30. I don't think RSI is going to blow out the divergence here. So before I hand this over, I want to check out a few things with you, face warriors here that come into our community here. How many have been trading for 4 years or longer? Yeah, it could be the Iran factor, Hamid. It could be, don't forget Venezuela is also on the front burner. That could be a supply issue. But yeah, it's really heating up. A lot of things are heating up around in the Persian Gulf right now, so that's a possibility. Okay. Uh, Anyone else in here has been trading 4 years? FX Glenn, you're a survivor. You've been trading for 4 years. Okay. You need to take your time. Rick, 4 years plus, you're a survivor. Okay, so we have some survivors in here. Okay. Oh, 10, 4, Scott, 10, you're a survivor. Ping pong. Look at that. We have a room full of survivors. That's excellent. Okay. You guys need to pat yourself on the back that you're still doing it. You're not only a survivor, okay, you're also a maverick, but a survivor. And I hope you've turned from a survivor AS to a thriver. Anyone in here? Ziggy started yesterday. What should I buy? Which way euro, Ziggy, up or down? All right. So then you turn from a survivor to a thriver. Okay. Who's ever lost a job and found another? Anyone in here? I'm raising my hand. You know, during the Baton Death March in the financial services industry. Okay. All right, Claudia, you're a survivor. Okay. It's a good thing to be a survivor. It shows your strength. Okay. Anyone ever go through a divorce or have an illness that was very difficult? Live with pain, chronic stuff like that? Hammett, you? Ping pong? Okay, you're a survivor, Hammett. Anyone ever been in their nation's armed services and been assigned to a combat zone?
Hey, Coach. I'm sorry. A headline just came out: China to
Go
raise
ahead.
tariffs on U.S. products. So just
Okay.
letting you
All
know
right.
that
Well,
that's
you
what's
know what?
moving the
That was
dollar
my
yen.
segue. That was my segue into you anyway. You're a
Well,
survivor.
okay.
All right.
So yeah, the headline just came out that that China is going
What a
to
mess.
raise tariffs. Hold on, let me grab everything.
What do
Sorry.
we even sell to them? What do they buy from us?
I don't know, but it's
Agriculture.
it's a retaliation type of
Yeah.
effort.
Yeah.
So let me pull over the charts. Hold on.
Okay, buddy.
The dollar yen is now approaching pretty key support.
Yeah. Yeah. Now it's going for it.
The
Yeah,
US,
it
by the
is.
way, the US does export aircraft, soybeans, vehicles, chips, and stuff like that.
So, okay, yeah. I mean, what do you have? Do you have a list of other items too, Stelios, that might be of interest to people? I mean, the dollar yen's going for this really key level support at 109.50, and if you watch the week ahead video, this is the level obviously that everybody needs to be watching as we approach it. So I'm sorry, Stelios, I didn't mean to cut you off.
No, please go ahead.
Wait,
Go ahead.
they're saying China to raise tariffs on how many billions? Sorry, I'm trying to keep an eye on all these headlines here. Tariffs on 2,493 U.S. goods to 25%.
Well, that doesn't help us. I mean, 2,900 and whatever goods. What's the dollar value of them? But yeah, okay.
$42.
Wow.
60 billion of U.S. goods there.
Gold's coming back.
June 1st. Yeah, so So those are the headlines that are coming out right now. And let's take a look at a little bit closer view of the dollar yen. So this is, you can see how very important this support is. So what I would do here is horizontal ray here,
Yeah.
and this is where you want to get kind of worried. So
I think comes in at 46, Blake.
yeah, it does. Yep, right around 46. So that's the price. That's what we need to be looking at. I don't know if we're going to break it just yet. I think, but look at the S&Ps; they are just really falling pretty aggressively here. So we're seeing a pretty good move down in the SPOOs, and I would assume that eventually it's going to weigh in on the yen. And one of the other things is the Aussie dollar is really taking a hit right now too. So this is risk aversion, at its finest. It's really
You warned about it Friday, Blake.
yeah,
That this
and
could happen.
on the week ahead video, I think we discussed discussed a lot of this, and this is kind of the world we live in now. So question is, how far are things going to go here? Let's take a look at let's see, here's the Aussie yen. Aussie yen took out some support. Let's go over to the Aussie. Well, here to take a look at the S&P. The S&P, I guess the S&P is. You look at the dollar yen and the S&P; they're pretty much running hand in hand at this moment in time. Let's take a look at the Aussie. There's the Aussie.
Maybe Stel knows. Stel, do you know how broad Smoot-Hawley was in the 30s? I know China wasn't a power then. I'm not sure who the trade war was with in the 30s. Any similarities? Because people are saying, well, it's different this time because we have, it's a modern economy, et cetera, et cetera. But, isn't it possible? I mean, that's really what deepened the Depression was the trade war. Do you know anything historically about it that could be an analog to what's happening here, or anyone know?
I'm afraid I don't. Although the economic world has changed massively since then, given that services dominate everything now, right? So
That's true.
but no, I don't. I'm afraid. Sorry.
Okay. All right. That'd be something interesting to look at. How history rhymes.
Yeah.
Doesn't always repeat, but rhymes. So anyway, well, it's it's not a positive. That's all I could say.
No, and we discussed this I think we discussed this on Friday. I mean, politically, this all makes sense. And I know I talked about it over the week ahead video. It's a situation where Trump, I think, is going to play the hard on China card, and he's not going to back off, and he's going to use that as a means of being able to combat his political opponents going in 2020. And I think we did talk about this actually a little bit on Thursday, but I can only anticipate that this is going to precipitously get worse. Watch this dollar yen. These stops below these lows. Here we go through 50. I mean, we should trade down. Oh, here we go. There we go. We are now breaking down. So there goes the dollar yen, taking out the stops, and here we go. And they're selling dollars across the board. I mean, look at the dollar index. Dollar index is really getting hammered here. So dollar yen, we got the cable that's actually rallying right now. The euro dollar, which is rallying here. There's the euro. There's the pound. Let's see how far these stops can take. They can take these stops in the dollar yen. I'm short some dollar yen, by the way. So just letting you guys know. 108.91, I guess, is where we're looking at. So, and Oh man, equities are just getting smoked here. Wow. Wow. Dollar yen's just getting wrecked. Wow. 38. Let's see if we can take 127% extension of this range. See where that takes us. That'll be 109.31. So I'm going to take my dollar yen off here. Took some profits really quick. I think we're going to find a little bit of support. I'm going to sell another rally back at 40. So I just took, I don't know, 20 some odd pips off of the market here. We're at the 127% extension right now. I don't know. Oops, let me go ahead. So here we hit the 127% extension of that extension or that range. We should bounce, but I'm going to sell any rally now till 40, 42, somewhere around there. So that was just a quick little gain. Now let's see if we can get some sort of bounce. Like I said, I'm from an intraday perspective, this is what I'm looking to do now. Just so you guys are aware. Sorry, I didn't. Usually I don't get an opportunity to actually trade while I'm on the webinar with you guys, but I'm doing that. If
Stell, any news on why crude is bucking the risk-off trend today? Is it Iran?
No, I mean crude started rising just after the China story broke out. So
and it's still rising. It's weird,
yeah,
huh?
Yeah,
I don't get it. It should be in line with equities
right.
or theoretically in the same direction, let's say.
Right.
But no, I'm not seeing anything. So
Okay.
another question I can't ask.
Wow.
I can't answer.
All right,
Sorry.
maybe the next one. You're my go-to guy for fundamentals here.
I mean, this dollar yen is just getting absolutely smoked. I thought I'd be kind of cute and smart by trying to take some profits here at the 127% extension. It looks like we're going to 161% extension, which is 109.10. Oh my gosh, just getting destroyed right now. Wow.
So the gold perking up, it was lower. Should be with the yen falling.
Gold is definitely perking up. That's gonna
So we could have
with yen strength.
So
Damn it.
when Black Monday comes, Steely Dan. No, that was Black Friday. How about in a New York minute, everything can change by the Eagles?
Yeah. I mean, really, it does. And I was looking at the cable. Chi in our chat room was like, "Oh, the cable's outperforming this morning," and I'm like, "Yeah, it is. It looks pretty good." And then all of a sudden, it's like, "Whoop!" Here we go. I mean, but obviously, this dollar weakness is coming through, all from this China retaliation with their raise in tariffs. And the problem that we have here at this point is that the dollar is getting hit with the trade war across the board, which, in the past, if you think about, a year or two ago, the dollar would strengthen as a trade war intensified. We're seeing opposite of that right now.
Yeah, we talked about that last week, Blake. Remember, we were saying, where's the bid in the dollar when we had S&Ps down 30 handles,
right?
3 separate days? It just wasn't there.
So, what could get really ugly is, if the bond market really starts to rally here, if we start to see bonds rip higher, this could get really ugly.
By the way, our friend Costas is just saying that there was apparently an attack or alleged attack on some tanker ships somewhere. So maybe that's what.
That could be doing it.
And look what Joseph Nicholas is tweeting about from the China Global Times. That's pretty interesting too. The threat of dumping treasuries. Yeah.
Oh, interesting. I mean, they can say that all they want, but the rest of the world will be running towards U.S. treasuries, for safety. So I still want to sell dollar yen on rallies, even though we're stabilizing here in the dollar yen, and you can't. I'm not going to sit here and say, well, I'm going to buy it. You know, a lot of, and let me point that out really quick. A lot of people, when, you know, if I say something like this, well, I don't want to short it down here. The next question that most traders ask is, well, why don't you buy it? And that is a really, you know, that's something that I want everybody to think about, that concept. There are traders out there that can trade both sides of the market and do well. I have never been one of those people. I'm a directional trader. So if I'm bearish the US dollar, Japanese yen, that means I'm only going to be selling rallies. I'm not going to be trading both sides. And what I found is there are only very few people that can actually trade both sides of the market effectively. And I'm not one of them, and I'm going to admit to you guys that I'm not one of them. And that I would say 95% of the time you won't catch me on both sides of the market. You know, unless I know we are specifically in a range, and I'm, you know, just trading inside of a range. Most of the time I'm pretty directional, so therefore, like in the dollar yen, I'm like, okay, well, I'm bearish, so I am only looking to sell rallies now. I'm not looking to play it on the long side. I'm only looking to sell rallies. And I would say for probably a majority of you people, and I'm talking about you at home, you're going to end up being more effective just being directional. And so that's, you know, how I feel about the dollar yen. Because I wanted to automatically head that question off at the pass. Why don't you buy dollar yen? No, I'm not buying it. I'm just selling it, and I'm looking to sell rallies. And right now we are, you know, we're at 35. Like I said, I'm waiting for a move above 40, and I'm going to start selling some. So if I can get it this morning, we'll see if we can. But pretty interesting news to start us off today. I didn't expect to be faced with this type of volatility as we came on to the face webinar, which, excuse me, doesn't happen often, and they try to catch me off guard when I'm in the middle of trying to yawn here on a Monday morning. So one of the things that I talked about, how many of you at home, and I'm asking you guys this at home, how many of you watched the week ahead video over the weekend? Scott did, Glenn, Gary, Umair, Forex Gal did. Great. Okay, and a lot of you guys did. Great. Chad did. And thank you all for answering. The one thing that we had to be watching over, and if you saw it on Friday, this is a pretty big deal. You look at the US dollar CNH. This is we talked about the yuan, and look at how strong it is. And this really should have been a clue to us today that stocks were really going to come under pressure. This is how China is really combating that. And I was waiting for the move above the 618 retracement. And when I got up this morning, I'm like, oh, we are above the 618 retracement. And I was thinking to myself, this market's going to turn south. I know we were already down, but I'm like, this market's going to turn south aggressively at some point today. And then voila, here comes the headline that really turned us lower. So we've got to watch this, the US dollar CNH, the renminbi, or the yuan.
I have to admit, Blake, that this move in the USD CNH from a fundamental perspective, not from a technical perspective, because I was looking at the same thing you're looking on the chart. So a break higher, was from a technical perspective, expected. But from a fundamental perspective, it really baffles me. I mean, yes, by devaluing their currency, in essence, what they do is they nullify the effect of the tariffs. Okay, fine. But by devaluing your currency as a country, that's not the only effect you have. I mean, you're losing purchasing power, which, it's not that China and the US are in an isolation, just two countries on the whole planet. And, what happens, it just affects, the trade between the two of them. So I don't really understand that.
Yeah, I think well, they weigh the 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 risks, right? Like China is more of a net exporter of maybe, or net importer of maybe energy and a few other things, but mostly they're a net exporter. So after the dust settles, are they going to be better off with a weaker currency or a stronger currency? They're probably
Yes,
thinking
but
with a weaker one.
this way, in essence, they take away the possibility for their own citizens to become consumer of what they actually manufacture.
But
Because
they've
think
made
about
great,
it.
but they've made great
Yeah.
strides in the last 30 years, Steve. I mean,
Yes,
it's
they would make even more if they could actually consume the products they produce, because what they paid with has more value. So it's I mean it's a big discussion. I know. Stelio,
Steve, sorry, I was
yeah.
just going to say, when they devalue the currency, their own products get less affected, right? The purchasing power of their own products.
right. They can buy their own products.
They can
Yes, of
buy.
course.
Look at the trade balance of China and the US. US has been consistently negative for years and years, and China has been consistently positive. So they are exporters. The others are China are exporting. So it will hurt. I think it will hurt more the US, this whole trade war. But you're right, Steve. But I think to a much lesser extent. The home produced products are going to be kind of, they're not going to be affected that much, the purchasing power, I mean, in terms of for the Chinese.
Also, Stelio, though, don't forget that they use a lot of materials that they don't have on their own, so they do have to buy with their currency.
Yeah, like
Absolutely.
copper.
That's the thing. I would say, maybe some copper, or maybe energy products, and then a few other things. But yes,
Just
but I
looking
think
at that
ultimately,
one chart, guys, I just want to bring it up before I forget. When Jamie was on, he featured that the one, and he had a level. I remember he was looking for potential shorts up here around 691. I thought I'd throw it out there.
Oh well, I'd be
Yeah, I know.
very interested to see if he would be standing in the way of this move right now.
Yeah,
Just saying.
I
And
know.
it looked, yeah, but I didn't watch the interview. I didn't get an opportunity to go back and watch the interview.
It
But I'm
is
sure.
78.6 back there too. So
All right.
anyway, I
Yeah,
know.
we're heading
What
right
different?
up.
You could throw your charts away in this kind of environment sometimes. That's what
Exactly.
you're saying, right?
That's a great point, Dale. When you start getting into these types of environments, your technicals become a lot less effective, and that's where the macro point of view becomes much more effective in my view. You kind of have to toss out the charts with the unless you're looking at it from a target standpoint. From a fade standpoint, you kind of throw that out with the bathwater. So but anyway, good morning, Steve and Stelios.
Good morning, Blake.
Thank you guys for being here. I'm gonna pass you over the charts, and I'm gonna get hopping. I'm gonna try to fade some of this dollar yen on rallies. So good luck to all of you guys, and make sure you take a look at Forest Park FX, our webinar sponsor, especially for those of you that don't get rebates or are trying to get into ForexAnalytix on a reduced cost. You can join our reimbursement program. So thanks for listening in, and I'm going to pass you over to my colleagues.
One thing is for sure, Blake,
Good luck,
we are probably going to have an interesting week, and after several weeks that we had like zero volatility and a boring environment, I think it's going to get interesting.
Yes, I hope
Which is a
so.
good thing.
Yep. Thanks, guys.
Enjoy.
Thank you, Blake. Steve,
Stelio,
on the subject of China, there's nothing else really, just China. I mean, but
yeah,
on that subject, there's two things that I wanted to point out. First, the one thing that we were talking about on this webinar on Friday, and Larry Kudlow actually went on an interview, I think on Fox News, and he said that he admitted that these tariffs are going to be mostly paid effectively by the U.S. consumer. He did say, he said both sides.
Yeah.
Well, both sides are going to get hurt.
Sorry, wait a second. Are there tariffs that you actually send the bill to the exporter? Because I've never seen such tariffs.
Theoretically, the exporter might lower the price to somewhat to compensate for that, but you know how it works. It's going to be mostly borne by the
and keep in mind, Stelio, that the vast majority, not all, but at least from the consumer side, the vast majority of the imported stuff are low margin stuff, right?
Yes.
So
there's
I
not much
doubt.
flexibility.
Yeah, and given that we already had tariffs and we just the US just increased percentage on the vast majority of them, at least, I think that if there was to be some kind of an adjustment like that, it had already happened.
Yeah. The other thing, which actually we were talking about before this announcement came out, was that Chinese. I can't remember which official it was, but one of the Chinese came out and said that in response to these tariffs, said, "Look, this is what's happening on the U.S. side. We can." It looks like these negotiations are going to go to a stalemate, and if that happens, it's going to be a game of patience, and our government will ensure that we come out the winners. And the power that the Chinese have in that respect, and the government. So that was interesting. But now there's another headline that's just coming out just couple of minutes ago, which actually says that China is to raise tariffs on part of 60 billion of US goods. So what's that part? We don't know. So it's a bit.
That is a damn good question.
It's a haze. It could be 1% of them. It could be 100% of them. So let's see what it actually comes out to be. But for the moment, that one thing's for sure: equities are hating it, and quite rightly so.
Of course, yeah. And keep in mind, we said that many times before.
Yeah.
They kept ramping up stocks with the rumors of an upcoming China deal, this, that. There was a one-way street after that, because there were two scenarios, in my opinion. We either had a breakdown of the conversation and the negotiations, which would be stock negative, or on the other hand, we had a deal which I never expected the deal to be really great. So the market would then do the usual, which is we would have a situation of buying the rumor and selling the news, because once a deal came out that wasn't good enough, then the market would sell off. And perhaps I'm assuming that one of the reasons that Trump is much harder on negotiating this is that perhaps whatever they could agree on wasn't enough for the market to be satisfied with. So knowing that Trump thrives on conflict, and his voter base is also people that are absolutely fine with Trump being hard on negotiations, I think that
till they go to Walmart in a few months, Steve.
Yeah, that's a different story. I think that they would also.
You know what I mean?
Yeah.
You'll back all the tough rhetoric and actions until it affects your wallet.
Yeah, that's true. Actually, that's true. Now, this is the level you were talking about, Coach, because I have the exact same horizontal support resistance area here in the 78.6. So yes, we are testing now this confluence of resistances. Now, do I think that we're going to stop here? No, I really don't think it's easy. Can we pull back from here? Yeah, we can. But from a technical perspective, I would
It looks like
expect
we're going to new highs.
Yes. I would expect that this would lead to new highs, even temporarily. You know what I mean?
Right.
Because this move was corrective in nature, undoubtedly. I mean, it had all the characteristics of a correction. Just look at the daily RSI at the moment; it's hitting like 81 plus. So no sign here that this is a high. Now, if you want to scalp it short, is this the place you would scalp it short? Yeah, sure it is. But keep in mind that you're definitely going counter trend here. In my opinion, as long as we remain above this unfilled gap at 675, trend is your friend, and the trend is clearly higher at the moment to close the whole Chinese yuan conversation, so we can see other things affected. Now, if I go back to the indices, really moving attempts from this market for 4 consecutive days Tuesday, Wednesday, Thursday, Friday, in every single occasion, especially Friday and Thursday, the market dumped way below this 280, 2860, 2870 horizontal support area. And every single time they managed to recover the market enough for the daily close to be within or above that area. Given though the outcome, it would have been impossible for them to hold it for a fifth consecutive day. I very, very much doubt that today they will be able to make it, recover to at least reclaim this area on a daily closing basis, no matter how much they try, unless some kind of news come out that are completely contradicting what we've heard so far, which means that the next support area down here at 2800, 2805 is the next one to come, and perhaps even lower than that. I'm still short the S&P, so I as you understand have absolutely no problem with that. Now, if you have a look at the VIX before we go to a few more indices, the VIX came back, retested this horizontal support resistance area as support. Keep in mind that we have broken out from this descending trend line resistance. And, it's already like 25% higher on the day. It's above 20 at the moment. I think that, this is a good time for us to make it to this target that we had all along, 25 to 26. I think VIX can really hit the target. Now, the DAX is obviously zooming lower with what happened. Even if this is a simple ABC, we had discussed about that. I think that all eyes are now focused on the 11,800 area, multiple confluences of support here, one confluence of multiple supports to be, exact. Keep in mind that this area was also the neckline of this huge head and shoulders formation, acted multiple times as support. Once we broke below it, it acted a couple of times as resistance. So why not? It might act as support once again. So I wouldn't advocate for somebody to be selling the DAX, close to that level. But keep in mind that if we break below it again, that's going to open up the downside once again, and then interpretations can even be, easily targeting new lows. I mean, new lows below that 10,000 something low. Now, FTSE at the same time breaking below, as you see, perfect channel here. We broke below it. We kept testing resistance, previous support as resistance for 3-4 days. Finally today we seem to be really going on to the downside once again. Next area of support 7,090. Below that, quite a lot of more downside coming. Nikkei is one of the charts I showed today earlier in the chat room. Keep in mind that this 21,000 area, the one we're currently testing, is a strong area of support resistance. You can see it in the past. I expected such a move here. Now, if we even break below 21,000, I think there's more downside coming, of course, with equivalent implications to the yen and to the USD yen, obviously. Nasdaq breaking through this 7,480 support. So next target here is roughly at 7,300. So another 100 handles to the downside easily. Keep in mind that from a technical perspective, ascending wedges call once broken for a retest of the bottom of the wedge, which, for example, in the case of the Nasdaq, that would point down to a move towards 7,000, a little bit lower than 7,000. And in the case of the S&P, that would call for a move down towards 2,735. So, if those wedges are to play out to their targets, that would call for quite a lot more downside. And, forgot to mention it, I consider it, an obvious fact from a technical perspective. I know that we also on occasion have some amateurs listening in. Obviously, strong areas of support like the ones I mentioned should act as resistance if retested. So I consider any retest of this area of previous support, very likely to act as resistance and a good level to sell against if that happens. Same deal here with the Nasdaq. I'm talking about this area, etc., etc. Now, let me also show here, we had the Shanghai Composite Index. I think we're going to gap down tomorrow, obviously. Keep in mind, we broke hard here. Nifty, false breakout there. Big move to the downside. We even had a head and shoulders formation top. We've already actually completed that target, so it doesn't really matter. Keep in mind, we're about to retest confluence of supports here at the 61. Actually, I have to redraw it. Okay, there it is. So there we are, and 38.2 as well. There it is. Okay, so 38.2 here, a little bit lower. We have this high. So, we might find like temporarily support here, but this move lower looks impulsive. So it has to be at least the first leg of a deeper correction, in which case I would expect a continuation lower for at least a deeper correction from here, one way or another. So a sell on rallies as well. Bank Nifty broke below this rectangle support, so an extension would target lower anyhow. So everything is underway. The FXI was toying around with this previous trend line resistance, in this case, support, this case acting as resistance. No, sorry, oppositely. Resistance in this case acting as support. I think we're going to break below it. And, next area of interest is actually down here, previous confluence of supports, roughly at 38. And needless to say, a break below that is a very, very bearish development. You can see why if I zoom out. We would then target again quite low, quite a lot lower. You can see this whole, you can actually interpret this whole recovery, as an ascending wedge. There it is. So like this, okay. So not a big surprise if we actually move even to new lows from there. Especially if the situation keeps escalating. Emerging markets, more or less same situation. You can see RSI divergence here on the daily was quite obvious. Rejection from well-defined horizontal resistance area, and we broke below the wedge, and we are going lower. So everything is pointing lower. Now, having to do with the USD yen, I need to remind you of one thing here, and this is the fact that the USD yen has been trading for years within this symmetrical triangle, which means two things. First of all, this triangle's support might act as a magnet, especially now that we're under pressure. It currently passes from 108, 108.20. Given of what's happening, it's very likely that we're going to make it there. Now, shorting against that level is ill-advised, obviously. But one thing is for sure: if for any reason we break below that level, we break below 108, that's going to be a major, major bearish development. And I think in that case, we're going to see some big, big market move to the downside. I bet a lot of stop losses are there. I bet a lot of fresh positions are going to be initiated there. And, it's going to be hell breaking loose probably from a technical perspective. If we break below that, we've done it already once, but that was, in a situation that we in essence had like a flash crash move. It lasted like for a few minutes, and then we recovered. But if we do close on a daily closing basis below that, there's going to be a lot of investors looking at this chart and going like, I should definitely not be long this pair anymore. And that on its own should, should produce quite a big move. Now, Kostas was right, and I'm totally in agreement with him. We've been seeing this today, this big divergence between crude and what's happening in the S&P. So a comment here on the daily, and then we can go back on the 4-hour chart. Kostas is claiming that that's one of the way to try to support the S&P, and that might as well be that. or those rumors, about an attack, or whatever else. Now, we've had a very interesting week last week because you don't see that happening frequently. You can see it here. We had, oh, sorry, wrong chart here. We've had like 4 inside days, and usually when that happens, and you then get a breakout, you should expect continuation. So I do think that if we close outside the range of the first day before the previous inside days, which was this one, 6th of May, we tested its range highs today, but so far we haven't broken outside of it. I think it's going to be a bullish development, and one way or another, from a technical perspective, that would point to a larger recovery in crude. I'm still short. I've only taken profits of 1/3 of my position, but I intend to take profits on another third of my position if we actually close, as I wrote in the chat room earlier today, above 62.75 today. So I'm not going to do something intraday. So that's how the situation is with crude. Now, gold is testing resistance at the moment. So somebody would probably expect gold to be more appreciated, today and on Friday, given the whole U.S.-China mess. But I have to say that the bid that we're seeing here is extremely underwhelming. Regardless, we're currently testing major technical resistance. So let's see what happens from here. Keep in mind, this is the confluence of this descending trend line and the 50 DMA. You can actually see it because it's exactly on top of this trend line. So if we break above this area, I think there are good chances that gold is going to finally accelerate higher, perhaps even make it to 1360. Silver doesn't really seem to care at all about it. Doesn't, to be honest, it's never appreciated anyhow as a fly to safety, safe haven medal or whatever. But I would have expected, it to hold better. Regardless, it still remains within this descending wedge. So, nothing really to do as long as we're within it. The fact that gold is doing better is also what has brought the gold-silver ratio very, very, very close to multi-year trend line resistance. You can see it here. Okay, so gold-silver ratio looks quite strong, and it's approaching this 88.50 area. Let's see what happens from there. It's going to be very interesting if we actually break out from there. That's going to be a very bullish development with short to medium term implications at the very least. Palladium is holding quite okay, given platinum, of what's happening, and palladium, same deal here, as you can see. We still remain below this previous channel, but we've had a big recovery on Friday, and we've retraced only part of it. Copper, of course, is suffering given the whole situation, but keep in mind, so far we've tested but not broken below this horizontal support area at 272. I'm paying close attention to it. If we do break below it, then this opens the door for another move towards 256, 257, previous rectangle support. You can see how important this area is. One step at a time. Let's see if we can break below this support. China to raise tariffs on part of, yep, we read that. Bloomberg had already said that in the article. They're just playing everyone. Finally, somebody speaks about the gap. Thank you, Steve. My pleasure, Oli. Steve used the Swiss has strong broken support at 101. Looks like 99 is a good target. Yeah, thank you for reminding me. Let's have a look at the Euro Swiss first, since we know it's the Swiss is acting like a safe haven, very frequently, and indeed we are pushing lower. But in looking at the bigger picture, no real thing has happened here. We still maintain this range, which is like trading between 114.50 and 111.80. Okay, so range trading to to resume at least in the near future, because we are some distance from support. And yes, USD Swiss is now pushing strongly lower. This more or less invalidates the possibility that this was a bull flag or a pennant. Opens the door that this move higher was a false break higher. Still, we haven't actually registered a lower low. We still have a sequence of higher lows. Um, I view this zone as the first area of support, 1003. And after that, we have the 99 cents previous low. I agree with you, which would coincide in this case, if it happens quite fast, with this ascending trend line support. In my opinion, having to do with the trend, this ascending trend line is the most important one, right? Because it, in essence, defines this uptrend, because it passes through all the higher lows. So yes, 99 cents, an area of interest, and I do believe that if we break below 99 cents, that's going to be a very bearish development, and it should produce more downside. Until that happens, we're in the middle of that range. Yeah, of course, given of what's happening at the moment, I understand why somebody would want to be short, but personally, I don't want to have any position here. Now, let's have a look at the DXY in isolation. And as you see, the DXY is pushing lower, but as we saw with the USD Swiss, is this uptrend broken? No, it isn't, because this ascending trend line support is still holding. And where would we invalidate that view? At a move below 96.75, this previous low, also currently more or less where this ascending trend line support passes from. So 96.75, a very important level in my opinion, and the one after that, 96.30. If we break through those two zones, I think that the DXY is going to be in real trouble, and we might see a much bigger move to the downside. I know a lot of people, Blake included, we're jumping the gun, thinking that the Euro USD might be a good buy here, simply because we've had the first elements of what you want to see before buying something, which is a slowdown in momentum, right? So undoubtedly, the bearish momentum here in the Euro USD was slowing for quite some time. Would I be long here? No, not until we break above 113. So 113, confluence of this descending trend line and resistance and this horizontal support resistance area. I don't want to be doing anything until we break above that. Now, once we break above that, 113, 113.20, I think that the ball will start rolling, and I think we should see an acceleration to the upside. And given that the market was quite bearish, the euro, I think that we might see, this move to the upside actually gaining momentum and, becoming something more important than perhaps some people expect at the moment. Now, going back to which pairs are theoretically speaking mostly affected by what's happening at the moment, theoretically speaking, that should be the Aussie and the Kiwi crosses. Having to do with the Aussie against the USD, very underwhelming reaction. I mean, we're still above the 61.8, so not what you would expect to see here. And the same situation with the Kiwi. In fact, I would understand why somebody would view this as a potential bullish opportunity once we break out from this formation. Now, would you be buying it with what's happening in with US and China? No, but if you see some kind of a resolution, given that it's been behaving very well, yeah, sure, why not? Aussie yen, responding quite strongly to the downside, but this is mostly due to what's happening in the yen and not what's happening with the Aussie. Regardless, we expected a continuation lower once we broke below this intermittent trend line. It was a parallel of that one. And I do think that this move can easily extend to the 61.8% fib at 74.45. Kiwi yen also attempting to break below a horizontal the confluence of a horizontal support zone and the 61.8. As you see, this area had acted as support once, twice, 3 times, 4 times, 5 times, 6 times, considering last week we tested multiple times. So if we actually manage to close on a daily closing basis below it, then we should be looking for more weakness towards this flash crash low at 69.40. Question about the Aussie Swiss. Okay, I have no idea when is the last time I had a look at that. Actually, now we can see when we were trading in this triangle, I expected a break higher and the continuation. We did that. We did get that. But now we reversed once again. So I would have to say that we're probably in a larger triangle here. Now, if we decide to ignore this flash crash, which I usually do when a move happens like this, that might be the formation you should be looking for. Okay, so I think we can easily make it back to retest this trend line as support, and if we break below it, then more weakness to come. Euro TRY looks very bullish to me, no doubt there. I mean, the situation with the Turkish lira has started escalating more and more. You can see that despite probably that was an intervention on Friday, we've already retraced a big part of it. The 6 area acted as support. So if we have a look at the Euro TRY, there it is. And, yes, it's, I mean, we've been retracing more and more of the previous move. So, yeah, but keep in mind, it's very, very expensive to be the short the Turkish lira. Okay, very expensive. So you have to take that into consideration. See if I missed any of the questions. Coach, do we have an interview today, by the way? Soya beans. Okay, question about the soya beans. Sure. S1. Let's see. Oh, holy smokes. First of all, the breakdown. I should start trading commodities because you've seen commodities, some opportunities that are so obvious. I mean, look at this formation. From a technical perspective, there isn't the cleanest technical formation that you should expect to trade, right? I mean, this is textbook corrective move higher. I mean, impulsive move lower and the textbook pennant here. Let's see if it even, not that I really care about it, to be honest, but let's see if it even confluenced with some kind of a big fib. No, it didn't, but as I said, completely unimportant to me because just by looking at this chart, this formation was so textbook corrective. So even if you wanted to be more conservative with this move, even if you want to be more conservative and ignore this little spike here and waited for this breakdown as confirmation, you would still catch an amazing opportunity to the downside. So what do I think about soya beans? Listen, if it wasn't a commodity, right? If this was a stock, I would say a lot lower. But knowing that it is a hard commodity, which means that it has production costs, real demand, etc., etc., I think it still has room to move to the downside. I mean, we just broke the new lows from this formation, so I would definitely expect an extension. And where would I expect this to extend? I think that, here you just need to employ some fib extensions and look at possible targets. Let's see. There you go. 127% extension, 776, 161.8, 733. Confluence with anything of interest. 766 is this high. Also some consolidation here. This low is also of interest.
Remember the war chant, beans in the teens? You know, it had never done that. You know, it'd been to $12 many times if you pull up like weekly or monthly. And we did. We had beans in the teens. And I have to think, Steve, that these ags are going to be fantastic buying opportunities there. You can't eat gold.
Without a doubt.
One bad weather year, El Nino's percolating out there. So, you know, I still have my commodity roots and Chicago roots, and I just have to think there's going to be
without a doubt.
Yeah.
And don't forget that always keep in mind that even from a mathematical perspective, prices of commodities are not distributed in a normal distribution. They always have fat tails to the right hand side, which means that usually when you get a big move or a big trend, it's usually to the upside at the end. You know what I mean? So it pays to be long once the technicals start pointing there. But to begin with, for the time being, trying to buy soya beans here looks like trying to catch like trying to catch a falling knife.
Yeah, unless you know, I agree with you. And you know, even when you think it's time, just for our audience, there are mini contracts on beans instead of 5,000 bushel contracts, which every 1 cent move is $50. So a $1 move is $5,000. They're like 1,000 bushel contracts at the mid-am. So you could do like micro lots in FX. You could scale in with minis.
Mm-hmm.
Anyway,
Coach, do we have an interview today?
Yeah, Adam's with us from Macro Hedged. So it's going to be interesting. I think for all our guests this week to talk about the events that we have in front of our eyes. So thank you, Steve, for your roundup. And your market roundup is better than any rodeo I've ever been to.
Thank you, Coach.
All right, buddy. So Adam, I see you here, and welcome back to Face. I'm going to make you the presenter, and what a wild day for you and I to be talking about trading in this environment. So,
you guys hear me okay?
Yeah, got you, Adam.
All right.
I hear you.
Cool.
Welcome back to Face, brother.
Hey, well, thanks for having me back. How's everyone doing? Can you see my screen okay?
Not yet. Now we can. Now we can.
Yeah.
More than just price.
Yes. I didn't know where you guys what you wanted to do, where you want to go. I've got a potential trade that we've put out that we can talk about.
Okay. You're the boss.
All right, cool.
Okay, so I mean, wherever you want to go that you have conviction with, and whatever you want to communicate to our community, buddy, I bring you back and give you discretion. You have power of attorney over the next 30 minutes.
Fantastic. All right, cool. So just a little bit about us. This is our second time talking with Dale, which is cool. Thank you very much for having us back. A little bit about myself. I started off way back in the day at Goldman's, which was 1995, 4, something like that it was. And I left there in 2004. And I've been sailing solo from that point onwards, running a small market making business, predominantly in the CME or NYMEX, obviously before the CME bought it. But after that, on oil products, RBOB, heating oil or diesel, and more recently kind of dabbled into other things as well. But the backbone is the oil space. So
it's interesting. You're the guy to ask then, because last week when the S&Ps were under pressure, and there had been, especially until today, pretty tight correlation between indexes and WTI. Do you know what's behind the WTI standing on its own in the face of risk off everywhere else? What gave it the lift today?
I think, combination. I mean, we've had the Iranian, the Americans playing tough, very tough on Iran at the moment, whilst those barrels have either been made up elsewhere, or Iran's doing a very good job still of getting those barrels out onto the market, whichever means they feel appropriate. They've got different relationships with different countries. It's very hard to kind of truly stop them. I think in the US lawmakers and that are assessing these sanctions are doing a cracking job attacking the companies that are potentially still working with Iran, but there's always going to be some barrels leak out. But when military, not action, but certainly military muscle is flexed, crude reacts. There's nothing, you only have to look at any form of major oil producer and associate that with any form of potential unrest. When Russia went into the Crimea, oil exploded. The Arab Spring, oil exploded. It's very sensitive to barrels off.
Okay. Do you buy the? Do you buy the?
Well, sorry, go on.
Do you buy the maxim that you should never short oil on Friday, Adam?
No, I just no, I don't.
Yeah, I know. Okay, all right. I figured
any of these. I mean, there's there's I've seen huge kind of gap down opens on Monday. It's obviously there's some weekend risk, and there's always a bit of war or political risk. But the guys short in oil of the week on a Friday and coming back on a Monday probably made more money than those being long it. So it's always one of those facts. I think people are more worried about political unrest.
There's some panel covering the top of your presentation, like a black rectangle square on top. Do you see that?
Right. Hold on one sec. Is that gone away now?
Thank you, Blake. No.
Hold on. Which
maybe it starts from the top. There, it's gone. Okay.
Right. Okay, fine. Yeah, it's just the pop-ups. Let me put my machine on to do not disturb. Where are we? Focus assist. Okay, cool. That'll make it all go away now. Right.
Okay.
Yeah. So one of the other things as well is very sensitive. And people, whilst Libya's not really a massive producer, they have a lot of the sensitivity to changes in Libya is actually quite profound on the oil market. Normally around the fact that their barrels are readily available, their oil's very, very versatile into many refineries.
Okay. Gotcha.
So that's always an interesting thing. I mean, kind of this whole energy independence thing for the US is always an interesting concept because there's most of the refiners in the US require Arabian oil, and many of the refiners in Europe require US oil. So there's a natural shipping demand always happening and a natural import-export demand always happening. So unless someone's prepared to invest I won't say hundreds of billions, but certainly tens of billions of dollars in refinery replacements that needs to go on in the US market, that play will always still be going on.
Yeah, the energy independence is lacking refining capacity here. That's a pearl. Thank you, Adam.
No worries. Okay, so what was I? So yeah, we've at Macro Hedge we've got 3 products out. So one is our options, which is our flagship. I'll go through the trade that we put out recently of that. The directional, which is for those kind of not really trading options, but want our kind of directional term points. The other one is our new intelligence. We had a lot of people ask questions about how does it all work and how does it all get put together. So one of the things that I wanted to do was ensure that we didn't give away our secrets per se, but we also give some explanations to the backgrounds to how we work a trade, work a strategy. And I was just going to talk everyone through that today so they can actually see it kind of pieced together and put together. So yeah, I won't dwell too much on these next slides because we've already done them. If anyone wants a copy of this, just ping me and I'll put this on share. An interesting slide we've got here, which is I've cut away the right-hand side axis so no one can see what price chart this is. But we gave this to someone to do some technical analysis on, and it's kind of spent a lot of time looking here. You can see the Fibonacci retracements, the touch points, the reverse head and shoulders, the breakouts. And one of the things we wanted to kind of just say was just we built micro-hedged intelligence to enable traders to have something else to rely on that wasn't price action, wasn't charts, because we need to be looking at what's happening to true value. Because when we released to this trader that basically we just used a random number generator off MathWorks for that chart.
Okay.
Even though it was absolutely adamant that the chart was predicting these prices and this was about to this trend line was going to break, it was just we used a random stream class to produce that and import it into a chart. So this, whilst we understand that there's a lot of technical analysis out there in the world, we wanted to enable our customers to see something that showed not necessarily an opposing side, but something that says there are other factors at work that's going on that's worth looking at. Okay. So what have we built? So we run 4 models. Two are compressed together. So our macro hedge market metrics, which is our trend and range model, macro hedged implied vol, that's our proprietary volatility model. It's actually the model I used for market making the crude. We've just rolled that out and indexerized it. And macro hedged turn, which is basically our oversold, undersold. So we're looking at, this is our core model. We're looking at how skew is impacting the pressure on the market, which will predict the turn points. And I'll show you how that works now.
Okay.
So this is what the users see. There's a free trial on this of 5 days for everyone. And you see, so if we look at kind of the S&P 500, because the next example is the S&P 500, where the market trends, whether it's in bullish mode, neutral mode, or bearish mode, what the implied vol is in relation to the last annualized over the last year, whether it's cheap or rich. But the key ones to kind of look at are the turn models. So you see as an example that the call turns incredibly cheap, and even the put turns on S&P 500 are fairly cheap as well. This was this morning, so this is we've not really seen that leg up in puts, but that was arguably because of the rally we saw Friday in the S&P 500. But if we go to this next slide, we can start to see how it can impact someone's trading. We're not about intraday trading. We're all about how can we assist somebody to make a gain over a longer period of time. That longer period of time could be we try and analyze over a year or quarter on quarter. But we've got a lot of day traders, technical analysis guys that use us to kind of assist their trading. Somebody gave us the best compliment ever a few weeks back. He said, "You guys are the sanity to my insane trading." And if the strategies we're selecting can bring you revenue that you can offset against your learning curve, then that's brilliant. So if we look here at what's going on, we've mapped back our model back into Bloomberg because to try and visualize, to help people kind of see what we're doing and what we're looking at. So if we look at the far left hand side red arrow, it's just predicting that our trend model turned. Now, our trend model is always going to be slightly late, but it turned pretty well for the S&P 500 last year. But that to me personally is not a great source of high probability profit, and that's what we're about. If we move over to kind of early November, you can see our put turns our put turns were starting to completely wane, and our call turns were spiking, and our model will depict a point when everyone's overblown, and you can see the key things here are those three spikes. The first one was absolutely perfectly timed. The second one was a little bit early. It was 1, 2, 3 days early. And the fourth one was well timed because whilst we all thought the bottom was potentially in, it did another 300 handles further south. So that's where this becomes of great value to any day trader or anyone looking over a week's time horizon or a 2 weeks time horizon, where we will signal when our model's physically seeing these skews being manipulated, where the large money's coming in and absorbing everything for a turn point, and that's something that we've now mapped out visually. If I move over, where are we now? So this is the sterling. There's another interesting one here. If we look onto the right here, you'll see that the call values around the Brexit votes were absolutely flatlined to zero. And there's just everyone was expecting further selling in sterling, but it was to the point where it was so cheap you could have funded long positions for free. And lo and behold, look what happened. All we had was a move up from 128 all the way up to 400 points all the way up.
You could have funded them for free by writing options.
Yeah.
Okay.
I mean, the
like
call,
a risk reversal where you're long a call and you sell puts and it covers it.
Yeah. I mean, it was so cheap in our model. It was just ridiculous. Even if you were wrong, you would have lost a couple of ticks, because it was just this is what I'll show you kind of coming up in the next example is what we're looking here is for predictable value, and the market was so sure. Everyone was wading in thinking the votes weren't going to pass and the world was going to end, and lo and behold, bang, up we go, 300, 400 points. And a similar thing happened. You can see late March, April time, where the calls just, again, the same thing. Everyone thought sterling was going to do fantastic, and Brexit's been delayed. Calls went to 100 or 1.0 in our index, and then you see that little spike there in the puts of the second arrow, and that's money moving in. And then there was around 133. We've just come off now 300 points from 133. It's looking at that. When someone makes a large trade in the outright, they're impacting that outright for that moment. When someone makes a large trade in the options, they're impacting the entire skew. So every single level there, that wing moving from the at the money right the way out to the 5 deltas, someone's physically got to smash everything. That's true money coming in and moving, and that's what we're riding with as well.
Interesting.
Sorry, that's a off slide. So, that shouldn't say what have we built. That should say this is a trade.
Okay.
So we, using that same ethos, the same model, we looked at the 10-year notes, and you can see, since the Federal Reserve came out incredibly dovish in their December meeting, we've seen nothing but buyers of bonds, and the whole world thinks that the US market's done, and where the recession's coming, and there's going to be no more rate rises. If anything, there's going to be rate cuts. Well, what we've got ourselves here in the bond market is the same thing that we've kind of had back in that sterling market that I was talking about, and also in the S&Ps back in October, November last year, where we're so weighted to interest rate cuts that there any tone change over the next few months that's a hawkish tone change by the Federal Reserve, we'll see an incredible snap back. And what we can even look at, these are things that don't move that much. So just to highlight the point of where we were back in November and where we are, this was Friday, you can see that there's a nearly a 0.35% difference in the 25 delta puts of the 10-year. That's just, in crude oil, that would be a day's range. In the 10-year, massive. These things don't move that way. Everyone is forecasting rate cuts, no more, and a bearish outlook for the US. Now, if we have any movement and we don't even need a rate increase or even stipulation that we're not going to get a rate cut, just any hawkish tone, that snaps back. So how can we make profit from that tone change?
And with a flight to quality going on today, is today a good time to execute that strategy? I mean, we haven't quite made new highs in the note. We may, it would look like a 3 drive, but you would start doing it on days where there's risk off and people coming into bonds right at them.
Absolutely. So we started doing it. We started doing it on the 8th of May. You can get it done today, a bit cheaper. But you can look here is that, the cost of this position is 1 tick. So you can have a 1 by 5 short ratio spread for 1 tick. So if the market continues to go up, the Fed stay dovish, they cut interest rates again, America falls off a cliff economically, we lose a tick. But if we have any movement for positivity, more hawkish tone, continuing success with results coming out of the US, this ramps into kind of crazy levels where, we were the 10-year bonds were at 122 just 4 weeks ago. Well, if we move back down to 122, you're up 400 ticks already on this.
You mean from 1 pip to 400?
Yeah, because everyone's just written off any potential downside to US.
Wow. I'm going to put some on.
Yeah, so we look for those kind of opportunities. Keep the risk very small for our customers.
Realistically, what's your target? Where would you start ringing the register, risking one tick?
If the bonds move down to kind of even 122.5, you'd have made so much money on it, you can just throw out 50% of the position, and just have a free ride. This chart here just shows that they're worth 2.1 ticks. They're actually worth 1.4 ticks. But if we have a move down in the bonds, a slow move down, you can see this moves from 0 all the way up to 1400. Well, we're not going to get up there, but if over the next 20-30 days, if this moves from nothing or 1 tick to 400, it's an incredible rate of return.
What's the spread bid offer on that option?
You can do, the spread is 1 tick wide, 2000 by 1600. You can literally get as much done as you like. Okay,
wow. Fascinating.
It's trading 1-2 at the moment. You get there's
you go in 1.5. Will they fill you if you went in between bid offer?
You can't go any smaller. Yeah, you get filled straight away. I mean, you can do as much as you want both sides. That's the beauty of the bond market. When they crush a strike, they crush a strike, and they do it. So when they operate in a way in which they're more than happy to chase something they've done wrong. Whereas crude, you'll never get it that tight. The mini, you'll never get it there. No one's quite 100% sure. Bond market moved from kind of 99% short to 1% short. Like very little in between sometimes.
That's
so you can really capture that. So that they're the using the intelligence panel. They're the kind of trades that we put out for the customers that where this might not yield, it might, but for that kind of risk, the rule that we're so highly geared in our favor. It's just it's crazy not to be putting those on. They're simple strategies. You can park them, and it's there to complement kind of day traders. We've got customers now that have either opened options accounts and users just for kind of either to hedge against. So they'll have an open position, but they'll be turning their day trading position with the natural hedging we're creating for them. Or
when's the expiration on this play?
They don't expire until late August, so you've got ages.
In this business, it's ages.
Yeah, you've got 78 days. So let's say I'm not a big fan of keeping anything in the last 30 days. So let's say we've got 55 days. Between we've got 2 more Fed meetings. Anything hawkish, this pays big time.
Man, I rarely see a setup like that. Where the risk reward. I mean, I've actually hit on like 10 baggers, but you're talking about 400. So and that's astronomical.
Yeah. The gold trade was 3 ticks when I came on with you last. I thought, like 3.8, and we sold that was we
bearish
sold that
there.
22. So
Nice.
looking at 7-8 times risk on that, we made
Right.
120 grand on that.
Nice, buddy.
Yeah, but it's just we spend our time looking for these opportunities, and you've got to stack them all up, and you kind of start acting a little bit like a venture capital money, seed money to venture capitalists. They will spread their bets quite evenly. They'll have a guy that's going to be quite a regular kind of, a service type business that that when you invest in that, it's just going to yield you 5-6% a year. It's like buying a property. Then you've got a couple of guys in their dad's garage that are either going to make you a billionaire or go bankrupt. And you have to spread that portfolio, your mindset across all of those types of events. And that's what we do, is we look for all of those types of events. We know the regular stuff that's always going to pay us. We know the stuff that might be a bit of a dice roll, but if it does, it's fantastic. And that's the key, because I think if you just sit there staring at whether or not, the mini's going to go up or down, eventually, the house wins and the casino will come and, throw you out the front door. And that's what we're trying to educate and show people, that's how they should be thinking, and park these things and just leave them there and act. Everyone should be acting like they're their own venture fund manager.
Interesting. I'm rooting for you to beat the house and bankrupt them. So Adam, anything you wanted to wrap it with, or you want to go to your website so people know how to follow you and get involved?
Sure. I mean, this is just jump onto Macro Hedged. If you can, there's a sign up free trial on the intelligence for 5 days. Otherwise we keep everything super low price. I said to you before, Dale, this isn't about charging $1,000 a month. This is trying to get as many people as we can joining us, actually seeing that they can survive. They can do this. It's not about kind of having to roll the dice every day and eventually you get caught out. It's about, what can be that long-term banker. We're working on the basis. I've been in this game for 24 years and you have as well. And you can't roll the dice every day. You need to be around in 5 years' time, and people don't think past that next 5-lot hit in the mini.
Yeah, that's what I was saying today. I asked people, have you been trading for 4 or 5 years and still doing it? And anyone who answered yes, I said, you're a survivor.
Yeah.
So you're a survivor, my trading warrior brother. And wow, great presentation again today. I really appreciate you stepping up and being with us today, Adam.
Cheers, Dale. Much appreciated, and a pleasure to be on as always.
Good hunting, and may the 10-year see 3.25 like it did last year by July.
If we see 3.25 by July, I think that's like 900 ticks that trade will make. So.
Yeah, I'll fly over and meet you on your own personal island, and we'll have a drink to celebrate it. Okay, buddy?
That'll be a beauty. All right, cheers. Thank you very much.
All right, take it easy, everyone. That's Adam at Macro Hedged, and you should at the minimum follow him on Twitter and check out his website. That's a wrap for me, guys. You're very welcome, Hamid. Everyone have a great day, and I'll see everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. Adios, warriors. Thank you for hanging out.